The current price for Nokia OYJ is $10.73, showing a solid intraday climb of 2.58% as of midday trading on April 28, 2026. While most retail investors are still looking at Nokia as that legacy telecommunications giant trying to find its footing in the 5G hardware space, the reality on the tape is telling a much more aggressive story. If you look at the heavy volume hitting the bid today, it is clear that the market is finally reacting to a major internal shift that most people missed during the last earnings call. Nokia has quietly transitioned from being a cell tower company to an AI plumbing company, and that distinction is why we are seeing the stock push toward its 52-week highs while its competitors are struggling with flat capital expenditure from the major carriers. The expectation was that Nokia would spend the next few years fighting for scraps in the 5G RAN market against Ericsson. The reality is that their optical and IP networks division is currently on fire, growing at a clip that was unthinkable 18 months ago. We are seeing a massive surge in demand for the physical hardware that connects data centers, the literal backbone that allows high-speed AI processing to function across regions. Just a few days ago, Nokia management dropped a bombshell, raising their growth targets for this segment to nearly 20% for the year. This isn't just a minor beat, it is a fundamental re-rating of what Nokia's business is actually worth. While you might be used to seeing Tesla stock or Nvidia stock hog all the headlines for AI infrastructure, Nokia is providing the subsurface connectivity that those companies rely on to actually move data. When you open your Robinhood app or check your Fidelity brokerage account, you might see Nokia sitting there with a relatively low price point and think it's a value trap. The common ground here is the belief that Nokia lost the 5G war to Ericsson and Samsung. However, the contrarian take is that by moving away from the low-margin battle of public 5G contracts, Nokia has secured a much more lucrative position in private AI RAN and optical interconnects. They aren't just selling antennas anymore, they are selling the high-capacity fiber systems that hyperscalers like Google and Meta need to support their massive capital expenditure plans. If you look at the Interactive Brokers platform data on institutional flow, you'll notice that big block buyers are moving into Nokia precisely because its valuation doesn't yet reflect this shift into high-performance computing infrastructure. Recent stock movement has been driven by a 49% growth in sales to AI and cloud customers. That is a staggering number for a company of this size. We are seeing SoFi Invest users and active traders on investing sites starting to notice the book-to-bill ratio, which is now well above 1. This means they are receiving orders faster than they can fulfill them. The institutional activity has been particularly loud recently, with several analyst upgrades highlighting that the demand for 800 gig optical pluggables, the things that allow massive amounts of data to zip through fiber optics, is far exceeding supply. This creates a supply chain tension that usually leads to sustained price appreciation. While the general market was distracted by Apple stock and its latest software updates, Nokia was quietly building out a manufacturing facility in San Jose specifically to meet this American demand for high-speed connectivity. If you are looking for investment help or browsing online investing forums, you'll hear people talk about legacy tech as if it's a dead end. But Nokia's business model has been completely overhauled. They operate in 4 main segments: network infrastructure, mobile networks, cloud and network services, and Nokia Technologies. The old Nokia was heavily weighted toward mobile networks, selling those big white boxes you see on top of buildings. The new Nokia is leaning into network infrastructure, specifically the IP and optical side. They've even integrated their acquisition of Infinera to dominate the synergy between high-speed routing and optical transport. This is the intelligent portfolio approach that many Schwab Intelligent Portfolios or SoFi Robo-Advisor algorithms are starting to pick up on, because the cash flow is becoming much more predictable than the cyclical 5G waves of the past. Institutional investors are increasingly looking at Nokia's dividend and buyback programs as a sign of confidence. Unlike some high-flying tech names that burn through cash, Nokia generated €0.6 billion in free cash flow in just the first quarter of this year. They have a net cash balance of nearly €4 billion. This gives them a massive war chest to continue acquiring smaller players in the AI-native networking space. When you look at your Fidelity IRAs or Fidelity Wealth Management reports, you want to see companies that have this kind of moat around their cash flow. Nokia has a massive patent portfolio, Nokia Technologies, which brings in high-margin licensing income from almost every smartphone manufacturer on the planet. That acts as a safety net that funds their R&D into the next generation of connectivity. Comment below how many shares of Nokia you currently hold, or if you are waiting for a pullback before jumping in. The institutional pressure is building because the expectation versus reality gap is closing. The expectation was a slow 5% growth year. The reality is that the addressable market for AI and cloud infrastructure is growing at a 27% compound annual growth rate. Nokia has explicitly stated that they are investing heavily right now to capture this. This is why the Fidelity ETFs and Fidelity mutual funds that focus on infrastructure are likely to increase their weightings in names like Nokia. They are no longer a speculative play on maybe 5G, they are a fundamental play on the certainty of data center expansion. While self-investing can be risky if you don't track these macro shifts, the move toward optical everything in the data center is one of the clearest trends of 2026. We have to talk about the risks, though. The reality is that while the optical side is booming, the traditional mobile infrastructure side is still a bit sluggish. Carriers in Europe and North America have been slow to pull the trigger on the next phase of 5G standalone upgrades. This creates a drag on the overall revenue numbers, even if the cool parts of the business are growing. If you're using a Fidelity mobile app or the Robinhood trading platform to track daily swings, you'll see Nokia's price can be sensitive to any news regarding government spending on broadband or telecom regulations. However, the diversification into private networks for industries like mining and manufacturing provides a buffer that they didn't have 5 years ago. They are helping secure critical infrastructure in places like Finland with advanced DDoS protection, making them a sovereign tech play as much as a commercial one. Looking at the future outlook, the catalyst everyone is waiting for is the full integration of AI RAN, radio access networks that are actually powered by AI to optimize power and performance. They've already partnered with Orange and Nvidia to pioneer this. If Nokia can prove that their AI-native networks save carriers 20 or 30% on energy costs, the expectation will shift from steady utility to high-growth tech. This is the kind of insight that Interactive Brokers fees and complex Interactive Brokers trading setups are designed to help you capitalize on, the moment when a company transitions from one category to another in the eyes of the big banks. For those of you doing online investment through investing sites, keep an eye on the book-to-bill ratio in the next quarterly report. If it stays above 1 while revenues start to catch up, we could see a massive short squeeze or at least a significant valuation re-rating. Nokia is currently trading at a PE ratio that is a fraction of its peers in the data center hardware space. The tension between its current telecom valuation and its emerging AI infrastructure reality is exactly where the opportunity lies for the patient investor. Whether you use Fidelity Brokerage, Robinhood Investments, or SoFi Active Investing, the goal is always to find the gap between what the market thinks a company is and what the numbers say it's becoming. In summary, we've looked at the live price of $10.73 and the intraday momentum that is finally waking up to Nokia's strategic pivot. The expectation was a slow recovery for a legacy brand, but the reality is a high-speed surge in AI-driven optical network demand that is outpacing expectations. We've seen how they are challenging the Ericsson narrative by dominating the data center interconnect space, and how their massive cash reserves and patent licensing provide a floor for the stock. As we look ahead, the growth in their AI and cloud addressable market, now projected at 27%, is the real engine here. Nokia has successfully navigated the transition from a hardware seller to a vital component of the global AI infrastructure, and the stock is just beginning to reflect that new reality. Stay sharp on the volume and institutional flows, because the old Nokia is gone, and the new Nokia is a completely different beast. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.